Nigeria's oil production has not met targets or objectives in an environment of lower oil prices as well. How is that affecting your own investment decisions and the inflows that are coming into the fund?
Thank you very much. It's a great pleasure being here. The Nigeria Sovereign Investment Authority is Nigeria's sovereign wealth fund. By law, we have 3 separate and ring-fence funds. A stabilization fund that offers stabilization support during times of economic duress. We have a future generations fund that's a long-term fund. And then we have a domestic infrastructure fund. Now, within the context of the Petroleum Industry Act of Nigeria, we have a royalty by price that actually allows asset under management augmentation, particularly in instances where the oil price is $50 and above. And so, of course, as the oil price goes up and down, that actually affects the amount of inflows that come into NSIA that actually give us the recourse to invest.
So then what does that mean for the outlook moving forward for NSIA? Do you focus on other assets potentially? Do you look to gold? Do you look to, where else are you focusing then?
So on the Future Generations Fund side, at the end of last year, actually, clearly valuation levels were high, and so we pivoted to cash. And that allowed us to do a couple of things at the beginning of this year. The first thing was we decided to pivot away from alternatives into defensive assets, particularly growth assets, as well as investment-grade corporate bonds. The second thing that we did was actually for our long-only portfolio, our long-only developed markets portfolio, we also decided to pivot away from the US to Japan, to Australia, and to Europe. And then finally, what we decided to do was to rationalize our assets allocation to see how we could consolidate the number of names that we had into fewer, higher quality stocks.
Did the pivot away from the U.S. happen prior to this new administration coming in? What was the thinking behind that?
Just the diversification play. It was important, given where we saw the markets, how buoyant the market was, that we began to look elsewhere, just to ensure that we had a more robust portfolio. We had no political considerations, so to speak. And then on the infrastructure side, I think we're looking at a number of large-scale transactions. I think the first thing that we're doing was around healthcare, particularly around oncology. You may have heard the NSIA co-founded a company called MedServ that focuses on oncology, on diagnostics, and on cath labs, and we are expanding that significantly. The second thing that we're doing is off the back of Mission 300, the proposition that both the World Bank and the AFDB co-founded, the NSIA Africa 50 Sustainable Energy for All are also putting together a $500 million distributed renewable energy platform. And then finally, what we're also doing alongside OCP of Morocco is to build a petrochemicals platform, starting off with ammonia, to see how we can backward integrate towards the production of fertilizers in Nigeria.
In lots of different asset classes. Let me just ask you about your long-term thesis about the U.S., just to pick up on what Jen was asking you now. We hear that some official accounts overseas are worried about the trajectory of U.S. when you think about the fiscal dynamics. The dollar has been heavily sold for the first few months of this year. Questions about really where policy is headed from here. How do you think about the investment opportunity in the U.S. with so much policy uncertainty right now?
Thank you. Very good question. I think as a sovereign wealth fund, we manage monies for future generations of Nigerians. So we take a 25 to 30-year-old view. The U.S. is the U.S. It is exceptional. It has the largest companies. It is focused on institutional. So irrespective of whatever is happening today, in the next 10, 15, 20 years, I think it goes without saying that the U.S. will be in play. And so as a sovereign wealth fund, we will always retain that exposure, not only to developed markets, but to the U.S. itself.
Well, and Aminu, you were just talking about how a number of African sovereign wealth funds are going to be coming together in just a few weeks in Abuja, you were mentioning. Is there a focus then on potentially local debt markets as opposed to looking international? Do you think African sovereign wealth funds are positioned to find that capital on the continent?
I think that's an excellent question. I think when you look at the size of our local pension funds relative to our infrastructure deficits, that is the kind of capital that we need to be looking to mobilize towards infrastructure financing. And I think we can do more as multilaterals within the continent, as sovereign wealth funds within the continent, to begin to find ways to actually enhance bankable propositions and find ways to give comfort to conservative capital, particularly the pension funds, to actually finance our infrastructure projects. On the 16th, alongside other African sovereign wealth funds, we will be hosting the Africa Sovereign Investment Forum in Abuja, and that will be the main theme of discussions at that point.
What's your target then for the end of the year?
In terms of
financing and mobilizing capital?
We're looking at a minimum of $1.5 to $2 billion as a start. And we are hopeful that a combination of all 15 of us will get there.